Let me know if you can see my screen.
Yes, sir. We can see you.
Okay. So good morning, everyone. We'll start with global market update for today. So losses came to a head on Monday with the S&P 500 sliding 3% to 5,186.33 points, while the Nasdaq Composite tumbled 3.4% to 16,208.38 points, with both indexes at 3 months low. The Dow Jones Industrial Average fell 2.6% to a 2 months low of 38,703.27 points. However, US futures saw 1.2% recovery in the evening deals. Asian market opened with huge gains. Nikkei up over 10%. Nikkei regained almost all the losses seen on Monday. South Korean market too rose sharply higher, more than 5%. Commodities to see saw some recovery. Both Brent and NYMEX up 2% from 6 months low. Global market rout has more to do with end of cheap funding than US economy. Fed policymakers signal rate cuts ahead, but not recession. Wall Street fear gauge logs record jump as investors bet on more turbulence. So this is about global market update. Now let's look at the Indian market. So global market sell-off impacted Indian market, and we saw a brutal sell-off yesterday across all sectors and indices. So Nifty fell by 662 points, almost minus 2.68% negative. So for today, we are expecting it to take a support at 24,000, which was yesterday's low. But if it breaks, there is more downside that may come. So probably the next level of support could be at 23,600 level or 700 level. On the upside, of course, could be resistance at 24,402 and followed by 24,600 level. If we look at option chain data for the current week expiry, so the data suggests that there is a resistance at support at 24,000 level. So we need to see whether this level is respected or not. But on the upside, we see a resistance at 24,400 and intermittent resistance 24,400, but actual resistance is at 24,500. So if this level is respected today, we can see some bounce back possibility. If not, then probably the next level could be at 23,800 as far as option chain data is concerned. Bank Nifty fell almost 2.45%, which is 1,258.05 points negative. So for Bank Nifty, today's support could be at 49,600 level, followed by 48,800 level. On the upside, 50,782 or 51,000. 51,000 could be a strong resistance, followed by 51,500 level. The Bank Nifty is looking weaker than compared to Nifty at the moment. Let's look at the option chain data for Bank Nifty. So right now, Bank Nifty is at support already at 50,000. That's where a strong support is being seen in option chain. So if this level breaks, there is no downside support as of now. So that would not be a good thing for now. But on the upside, we are seeing a resistance at 50,500. So that's about the option data in Bank Nifty. We saw a huge sell-off in mid-cap Nifty, and of course, people who are having portfolios, they would have already seen, a good amount of decay in their portfolios yesterday alone. So for today, the support could be at the yesterday's low, 55,486, followed by 54,500, and the upside resistance it at 57,200, followed by 58,000 level. Small cap also saw a huge sell-off yesterday, which is almost 4.57%, which is 858.60 points negative. And for today, of course, this level is important, 17,900. If this breaks, the next level would be at 17,568. followed by 17,200 level. On the upside, the resistance could be at 18,257 near yesterday's high, and followed by 18,536 level. So these are about the indices. Now let's look at the sectoral information. So sectoral information. So if we look at the overall sectoral details, all of a sudden market breadths have turned bearish. If you see, we are seeing all red now from green. So there is still some steam left as far as the data is concerned. Telecom, there is some steam left. Healthcare, agriculture, fast-moving consumer goods. So these are the sectors which we have been talking about some last 3-4 weeks. So these are still having some steam left. Mining, shipbuilding, though one of the top performing sectors, I've seen some sell-off yesterday. So the people who are little aggressive, probably it's a good time to accumulate some of the shipbuilding stocks. And then industrial gases, media and entertainment, logistics, consumer durables. So these are the few sectors have few stems left. If you look at the deliveries, we are not seeing any positive deliveries. If we see, most of the market caps have fallen yesterday, so huge profit booking. We are not seeing any positive delivery so far. So definitely it impacted a lot due to yesterday's sell-off. So the conservative investors probably would recommend to stay away from the market for now until market settles down a little bit, and probably they can it's a good time to shift into ETFs, probably Nifty ETFs, Bank Nifty ETFs, and gold ETFs. So that would be a recommendation. So looking at the basket recommendation. So for this week, we'll continue to have Tata Group stocks, expected returns 8%. Let's look at the performance quickly. So it's obvious. So now most of the previous basket calls have turned negative. Large cap at minus 0.09%. Auto is at 1.91% negative. Private bank is at 5.11% negative. FMCG and pharma are still doing well, even after sell-off yesterday. They are still positive, 3.02%. Pharma is at 2.56%. Tata Group is down at 4.04% as of yesterday. Need to see how it does today. We are seeing some bounce back, so let's see how it plays out during the trading session. So that's all about today's update. Any questions?
No questions, sir.